Good evening, everybody. We're going to kind of concentrate on the basics tonight. And the basic is, how do we know, or what do we use to analyze what the overall market trend is doing? The reason we always want to know the market trend in general is that's going to be a high trading factor for whether we want to be going long or short as far as our positioning. So I've kind of modified the description of a candlestick analysis as a hybrid of taking fundamental input, because probably 90% plus of all investment decisions are based upon fundamental reasons. And then we can add that information when we see it kind of coinciding with technical indicators. So there's about 5 things that we can use to kind of get a good feel for which way the overall market trend is going. Now, obviously, the 12 major signals are your first indications. And the reason I say 12 major signals, I always get asked, which ones are the best signals? Which is the strongest signals? And it's usually when we're looking at the 12 major signals that they're asking that question. And the answer is, they're all good. Remember, there's 50 or 60 candlestick signals in the candlestick universe. Through the last 30 years, we've narrowed it down to these 12. The rest of them don't occur often enough to spend a lot of time and energy trying to remember them. Doesn't keep you from going back through the books every now and then and identifying which ones of those signals, or just identifying those signals just by looking at them, just so that if you ever happen to see one on a chart, at least you know it's a signal. Then you've got the patterns, which work in conjunction with the signals. So again, what should be the first analysis before any trade decision is made? What is the overall market direction? So once you use the signals and patterns, another very strong confirming indicator is our T-line. And the T-line is the 8 exponential moving average, which has Fibonacci characteristics. And those Fibonacci characteristics merely mean that the 8 exponential moving average, the T-line, acts like a natural support and resistance level of human nature. So when you take that in combination with a candlestick signal, we have the T-line rule, which basically says if you see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close back below the T-line. Same thing is true on the downside. You see a candlestick sell signal and a close below the T-line, you can stay short until you see a candlestick buy signal and a close above the T-line. Now, why is that important? Because of our frail human nature. If you were like me in the past, if you had a good profit in a trade, usually I was so happier than a pig in doo-doo that I had a profit. And then my fear would be, boy, if I've got a big profit, I don't want to give any of it back, or surely I would look really stupid if I let my profits go to a loss. That would be terrible. Roger Scott says there's 64 defined candlestick signals and patterns. That's a great book, except I don't know who Roger Scott is. So using that information provides a very strong format for investors. One, it allows you to be mentally prepared then you can assess the probabilities of which direction a trade's going to go. You can become more analytical as far as what that trade should do, and that kind of results into greatly reducing your emotions in your trading. So this is not rocket science. Very simple. If you see the Dow do an evening star signal in the overbought condition, the probabilities are we're heading down. See a morning star signal in the oversold area, probabilities are heading up. The probabilities even get greater when we can see exactly what everybody is making a decision at, like a major moving average, number one. Number two, if it closes above the T-line, shows us there's been a drastic change of investor sentiment. If we're in a slow dumpling top, we know what to do as soon as things get dicey and close back below the T-line. Want to be out of any longs or stocks that are looking weak, because I put on here, note the power, that as soon as you're below the T-line, the probabilities become extremely strong that you're in a downtrend. I'm cutting in and out. All right, is that happening for everybody else? Alan, you might have to go up and click on the red X, log off and log back in and get a better connection. Oh, pshaw. I just blinked and flipped out a contact lens. That's justifying how to do it. Hold on for 10 seconds. Let me get this back in my eye. So this is the one thing I always want to stress. As soon as you're below the T-line, the probabilities are extremely strong that there's been a reversal. And I will use the word extremely strong. Oh, there we go. How's that? I want to stress that extremely strong means the probabilities are dramatically changed once you close below the T-line. The other thing you can do is confirm it with the other indexes. If you've got one index going up during a trend and the other index showing selling during that uptrend, that usually means the trend hasn't changed. You just changed or just seeing some shifting from sector to sector. It's when they all show sell signals at the same time or all show buy signals at the same time that tells you there's been a major change of an investor in the market. A major change of investor sentiment in the market. And we've got much better clarity when we can use the visuals of candlestick analysis, knowing the signals, knowing where they should occur and where they're changing investor sentiment dramatically. And if we see a piercing signal gap up through the T-line through a resistance level, we now have a very strong assumption that we're in another trend. Yes, this is true on all time frames, Gary. So the basic definition of candlestick signals are, they are the graphic depiction of everybody buying and selling during a specific time frame. So this could be a 10-minute chart, an hourly chart, a daily chart, a monthly chart, or a 1-minute chart. It's still all the same. Investor sentiment works the same way time after time in all time frames. So you can see when there's a major change of investor sentiment. If the T-line is acting as a support level, or you're trading above the T-line, as soon as it closes back below the T-line and your stochastics are starting to roll over, that's a major indication that you've had a change of investor sentiment. We can also view the graphics if we can see what everybody else is watching, whether there's a trend channel, and seeing what happens when it gets near the top of that trend channel. Now remember, we've also got a caveat to the T-line. Excuse me. The caveat is the further away you move from the T-line, especially in the overbought area, the higher the probability it's going to come back and test it. So when you get that far away from the T-line, and you can see they're getting pretty close to the top of that channel, we can be prepared to be ready to take profits, knowing that if we see selling, at least they're coming back to the first target, the T-line. Then we can see what it does from there. But this at least alerts us to get ready to take some profits if you start seeing some weakness. And then look down here. Look how far away you are from the T-line. Look where you bounced. I don't even know. Oh, that's the 200-day moving average. Bounced right off the 200-day moving average. Did a Morningstar signal right here at the support level. Closed above the T-line. Stochastic's coming up. What's the assumption from that point? We're back in an uptrend. So again, this is not rocket science. This is just putting all the pieces of information that we know tell us there's been a change of investor sentiment. And we can see exactly what everybody's decisions are at levels that everybody's watching. So when they came down through the 50, came up, we could see they failed by coming back below the T-line, telling us our next pattern's in progress. Wave 1, wave 2, wave 3 of a bearish J-hook pattern. So you've only got about 6 or 8 patterns, and you've got the 12 major signals, 6 longs and 6 shorts. And the way I learned the patterns and signals was I would just go back through charts and say, all right, there's a reversal here. What was this signal? I eventually learned this was the Morningstar signal. When it got to the overbought area, they don't have one on here. There was another buy signal. So every time I saw a reversal, I'd go to my charts or my antiquated information back in the late 80s, early 90s, and learned what these signals were. And the reason that you've got the benefit of what I went through for years, not years, but that I soon discovered there weren't all 50 or 60 signals working. It was just about 12 of them. And so I kept thinking, well, I don't need to be learning all of them. Let's just figure out what the 12 or what the ones that are working. So there's our Morningstar signal. Reversal. What's this tell us? Whoops, maybe our uptrend's not very strong. So at least at this point, we can make a decision to say, all right, maybe some of our longs want to close out. And then we see another pattern setting up. So it allows us to get in and out of positions at the appropriate time. There's our alert, that gap up. If we're in an uptrend, now we can go find the patterns that are going to correspond with that trend, and we know why we want to go with a pattern, because a pattern is usually going to produce not only a high probability of being in the right direction, but the magnitude of that direction is going to be much stronger than just merely an uptrending stock during an uptrending market. So there's a lot of times where I'll point out in the chat room that we want to observe the obvious. You're in the overbought area. You've had a major uptrend. Now we're starting to see indecision, a bearish harami, a doji. What's that telling us? That everybody and their brother is watching and making decisions once it's gotten up here in the overbought area right at a major resistance level. Jimmy, yes. And let me finish with the PowerPoints, then we're going to go to live charts. But if you'll ask me that question again, I'll I'll show when it gets to those levels where you have to make decisions. And that's where you flip down to your 10-minute chart. Sorry, this frog keeps jumping in my throat here. Okay, how's that? All right, so this is what I call observe the obvious. You're in the overbought area, and you're starting to see indecision. That bearish doji harami was our first clue. Sake, Coke versus Pepsi. Oh, we're going to upset Travis. But that's telling us we want to be watching to see if they take it up further. It tells us the 200 wasn't acting as resistance. They start taking it down. What's our doji rule? Doji rule says that they're going to move it in the direction of how it moves after a doji. There was our doji rule telling us, all right, we should be taking profits. Should we get ready to go short? Well, when they gapped it down through the T line after failing at the 200, that was a pretty good indication it was time to go short. No, this one's not a blue ice failure, Bill. A blue ice failure would have been, nope, not on here. Let's see. Oh, blue, nah, we'll find a blue ice failure. Okay, so candlestick logic. If witnessing a change of market direction, what is the best strategy? The best strategy is you start getting ready to take profits and going the other way. Another indicator is the corporate bond index. Oh, I keep forgetting. Was it Johnny Seville showed us this? Just the logic is if the high risk corporate bonds are selling off, that means they don't have confidence in the stocks themselves, so they're selling off the bonds. So that becomes a good index. And then logic says if the market is turning over and you can see what I call the biggies, Amazon, Apple, Tesla, Netflix, NVIDIA, if they're starting to sell off, they're the ones that everybody's trading, that also is an indication that investor sentiment is changing. We can also identify what dumpling, or what patterns are setting up. If you're seeing a lot of dumpling tops, that means investor sentiment's going the other way, getting ready to produce strong moves to the downside. So again, candlestick analysis works in all time frames, and it tells us exactly what's going on in investor sentiment. Downtrend, a pop-up. Then your bearish kicker signal, taking you back below the T-line. What's that implying right away? There's more downside, or wave 1, wave 2, starting wave 3 of your J-hook. Depending on the time frame that you're trading, if you're a longer term investor, and you can just flip, say, what's my weekly chart telling us? Oh, the weekly chart's telling us we're still heading down. Or even if I want to get more analytical, what's the monthly chart telling us? We're still heading down. So anything that you can use as far as the analysis of what you're trading, depending on, again, your time frame. Obviously, you're not going to use a monthly or weekly chart if you're day trading or you're swing trading. But if you can see that your biggies are trading down also on weekly charts, that means maybe we got to assume that we're heading in a downtrend. Now, the other indicator is if you are looking to find the strongest sectors, you can do the sector scans just as easily. So if the market is flat or up slightly or even down slightly, and we can see there's strong buying in the shipping and ports, what's the logic from there? We go to the individual stocks in that sector and see which ones are producing signals. So we can use the sector, say the sector stock, or not stock, sector charts to tell us, whoops, there's some interest coming into the pollution stocks. Let's go find the best ones. They're starting to sell off the pollution stocks. Let's start taking profits. And this is, again, where you observe the obvious. Where did they pull back to? They didn't hold at the 50, I'm sorry, at the 200. Well, they started buying again when the pollution stocks hit the 50, did a bullish engulfing signal. Stochastic's coming up. Means if we sold here, maybe we start buying again here. And we can see which sectors have consistent uptrends. A while back, it was the lithium mining stocks were heading up. So when we have that information of, should have listed them. First of all, you've got the signals and patterns that you correlate with the market indexes. You've got the key line to see whether it's confirming an uptrend or a downtrend. Then you've got the corporate bond index to confirm that you're heading in which direction things are likely to be heading. Then you've got the biggies. Amazon, Apple, Tesla, all the Netflix, Nvidia, things that everybody's usually watching and trading. If they're heading in a bullish or bearish direction, that's going to be another indicator of what the overall investor sentiment is in the market. And there's one more which is all part of the sector. But if you Mo, this is, we'll get to lithium. This one's a little bit over chart. I was just illustrating that sector was an uptrend. So hold on, we're going to be going to live charts here in a minute. But what we really want to point out, again, is we got a lot of people asking about option trades. We're going to be doing the option training on October 29th. There will be a full day training. We usually have it scheduled from 10 to 2, but you'll be lucky to get out before 3:30, 4 o'clock. And what we're going to be doing is, first of all, going through price. Three very simple trading strategies, which is mostly going to be oriented toward spreads, because they're the best way to mitigate your risk and leverage your trading. So on something like Carvana, right here as it's turning over, maybe that's your best place to, and that's the best place to put on spreads. Then you've got this consolidation with your best friend gap down, another spot to put on just puts. But there's always going to be good combinations of, at some points, maybe you're buying puts here and adding spreads here. And that's what we're going to kind of walk through. And there's all points of the market. Where's the best strategies if you're doing calls or put spreads or buying calls and puts? Where do you want to do it? I mean, you might not be buying puts here, but you might be doing put spreads here. So anyways, that's on October 29th. It's $297 for non-members, and discounted for members, it's $197. So here's our clever, well-hidden strategy that you're better off just signing up as a member for $97, getting the $197 price, and with that $97, you're going to get at least a month membership. That for the same price, at least you get a free month to really dig into why candlestick analysis is probably your strongest, I think, well, that's me. I've studied every single technical indicator out there for the last 45 years. And the strongest thing that has the most correct indicator is candlesticks because it uses the most correct indicator, human nature. If you order in the next 10 minutes, that's right. Okay, so let's flip. I hope this will work. Oh, almost. Let me see if I can get this. All right, so if we each day, hold on, Jim, let me see if I can get this in here. That's right. And it used to be a toaster, wasn't it? Okay, so our first analysis on any given day is what do we think the market is going to be doing? Well, you can see ever since it failed up here, we've had bearish J-hook patterns. And here's one of the things that I like to point out because it's something that a lot of people don't understand. Look at that formation right there. That is not a reversal signal. Now, why would we say that's not a reversal signal, that strong buying? Because the Japanese rice traders have had 400 years to analyze which are the signals and what aren't signals. So they've already studied that if you see a formation like this, you might have an uptrend, but not with the same strength or magnitude as if you see an actual signal. So if I see this, I have a different approach. If I was short, I might cover the short positions, but I'm getting prepared to re-short if the market turns back down again. Now on this one, I'm pretty sure I'll be covering short positions or the ones that are already showing buy signals and starting to add long positions. However, the nice thing about candlestick analysis is at this point or this point, your short positions are working. They might start to get a little bit dicey. You go and get ready to take profits, but more than likely, you're starting to find some buy signals that are acting well. So in this stage right here, you might have a combination of short positions as well as long positions in the portfolio. So now let's go into a little bit more analysis. Today, it traded up early, and by the end of the day, they were trading back below where they opened. Now, is that relevant? Well, if you can see that there's this downtrend, and now they're kind of rolling over a little bit, and you're up here in the overbought condition, that's saying that's not showing a lot of strength. Any long positions that we have better be acting well, or let's be a little bit more prepared for things turning back down. Now again, do I make our analysis purely on the Dow? No, it only takes a matter of 15 seconds to analyze the Dow, the NASDAQ, the S&P 500, and the transportation index. You can go through that quickly, and we can see what was happening over here on the NASDAQ. Whoops, I want to keep this. Notice after they traded up today, let's make this bigger again. Hold on. When it was trading positive today, what was it telling us about the T-line? It's telling us the T-line was pretty much acting as a support level. When they came back down through the T-line, What was that telling us about the T-line? It's not holding. And remember our probability factor. If they're closing below the T-line, we better watch to see whether the probabilities have changed. And what that tell us about our overall market analysis or trend analysis? Pretty much told us that this downtrend was not breaking out. We're still in a downtrend. You add the analysis of the, whoops, well, come on. The analysis of the S&P 500, kind of the same situation. You have this downtrend. Notice when they gapped up the other day, most people saw the S&P up pretty strong on that day. What did we see? We saw there was selling because they opened it here and they were trading it back lower. As a candlestick analyst or trader, I told us, wait a minute, they aren't buying today even though it's up. There's still some selling going on. Then at the close of today, they closed back below the T-line. What's that giving us the analytical evaluation? That this downtrend is still maybe the most predominant factor. Then one more, whoops, there's your transportation index, what that is, closing well below the T-line. That's pretty much also kind of an indicator that the bulls aren't real strong in this market. So you've got those indicators, and then if you see what Amazon did, traded well below this resistance level. So you can go through this quickly and say, well, Apple traded back to toward the lower end, still not showing any bullish strength. And NVIDIA, we were getting ready in the options room to buy NVIDIA because if it had closed up here, what was it telling us? Well, there's a big left-right combo. There's our bullish harami. There's our confirming that it's supporting at the T-line and telling us they're starting to break out of this downtrend. Get ready to buy. I'm breaking up again. Oh, man. Breaking up is so very hard to do. So if it had closed up here, obviously this would have given us a completely different scenario of, who is that? Carol, you might have to hit the red X up in the very top right-hand corner of your screen, log off, and then log right back on and see if you can get a better connection. So what did this signal, or what did this formation tell us today? There wasn't a lot of strength now in that price. Not a lot of strength. Not a lot of strength. So even though our stochastics are heading up, if the market opens lower tomorrow and this comes back down through the T-line, what's our basic assumption? That weakness was illustrating that this downtrend was still in progress. Now, one of the indicators is the YMs, which are the Dow futures, and it's starting to at least showing tonight it's trading lower. But remember what I say about the futures. They don't mean a hill of beans until about 7 minutes before the market opens. Remember, this is investor sentiment occurring at this time of night, which has nothing to do with what investor sentiment might be at 9:23 tomorrow. All right, so if we got the, oh, that's why I was languishing here on. So if we have the biggies not showing a lot of strength and the market not showing a lot of strength, that should make it a little bit more obvious that there isn't a whole lot of bullish sentiment coming into this market just yet. Now, that doesn't mean, oh, no, skip a step. The other factor, and let me see if I can find them, is one of the kind of the subliminal indicators are that once you learn how to do your scans, which should only take now, I tell people, even if you don't know what you're doing yet, it shouldn't take any more than 20 minutes a night. Once you know what you're doing, maybe 10 minutes a night at maximum to find what the trend is doing, which sectors are the strongest, which sectors are the weakest, which individual stocks are producing the best bullish or bearish trades. So part of that analysis is that if you start seeing, even in an uptrend, lots of stock positions, like Moderna, doing a strong bearish signal where it should be breaking out. Notice your fry pan bottom. What should we expect when you get back up toward the fry pan bottom breakout level? You should expect a breakout. If it does a bearish signal, what's that telling you? That they failed here. And where did they fail? At a level that everybody is watching. That tells us, oops, that's not acting very well. But look how definite, or look how many factors we can put into that analysis. Bearish engulfing, failing to break out, right at the 50. The next day they close back below the T line. Now that's a very obvious sell signal. And when you're starting to find a lot more obvious sell signals, even though the market is kind of moving up, it tells you get ready. Something's happening where this one you're probably going to see on the recommended list tomorrow. Look where your bearish harami occurred. Right smack dab at the level everybody else was watching. So this is the nice thing about the graphics of candlesticks. Here's your morning star signal, close above the T line, stochastics coming up, you're in an uptrend. What's your first likely target? Well, you want to see what happens at the level everybody else is expecting. What do we see when we get there? There's your bearish harami, right smack dab at the resistance level, and then they gap down through the T line the next day. What can you assume? That this did not get up through the resistance level. But your downtrend, uptrend, look for your next move to the downside. Now, a blue ice failure is a quick move. We had that same question in the chat room today. A blue ice failure, this is more of a pattern failure. A blue ice failure is when you see it fall through the ice, they come up real quick, test to see where they fell through the ice, and they fail. That's when they head down. This is more than just a downtrend and then a pattern move to the upside. I'll still see if I can find a blue ice failure as we go through here. All right, so let's go to the ones where we recommended today some of the energy companies, because there's your bullish J-hook pattern. And again, look at the confirmation of this being a pattern. Look what they do right here at the T-line. Now, the reason I keep pointing out the T-line, especially to new folks, is nobody has the T-line on their chart, which means when you see it so often, use the T-line as a resistance level or a support level. That's just that much more evidence that the T-line is acting like a natural support and resistance level of human nature. So the market got soggy by the end of the day, but look at the pattern still setting up in the energy companies. We recommended also EOG. Look at your J-hook pattern, and this is where you put 2 plus 2 together. Look at your bullish flutter kicker signal, which is usually a strong reversal. Robert, it doesn't really matter. You can use whatever works effectively. Now, I know the 8 works effectively for me because before candlesticks came along, I was the worst investor in the world. I was even a stockbroker for 8 years. And I got out of the business because I realized that brokerage firms had no more idea about what moves stocks up or down than the man on the moon. And then when somebody put candlesticks on my desk in my home office when I was buying, renovating, and selling houses in Atlanta, Georgia, they said, take a look at these. And I figured anything as sophisticated sounding as candlesticks wasn't worth the time and effort. But they kept badgering me, and I finally picked it up. And as I started looking at it, I said, this makes sense. And the more I looked at it, the more sense it made. So that was the main factor that still kind of permeates through candlestick analysis, is everything you see is just pure common sense put into a graphic depiction. A bullish flutter kicker that's a bearish candle, I think. Oops, yes. Notice how it opened here and closed here. Now we know what the strongest reversal signal is. It's the kicker signal. The kicker signal is where they have a dark candle. The next day they gap it up and go the opposite direction. That's your kicker signal. However, look what they did on this one. They took it up and they did a doji. So what is our alert on this one? The fact that they gapped it up above the previous day's open. It's a gap. Now what do we know about our doji rule? Doji rule says it's likely to move in the direction of how they open it after a doji. So as soon as it opens positive and trades positive, that becomes a bullish flutter kicker signal. And the reason we call it a bullish flutter kicker signal is if you took out this little flutter, you've got the strongest reversal signal, which is a kicker signal. Then, if you know the results of a kicker signal is more upside, and you can see your pattern, your J-hook pattern, what's the strong expectation? That you've got wave 1, wave 2, wave 3, starting with a very strong bullish signal. So bullish flutter kicker signal. Not only do we have the 12 major signals and the patterns, but then we have what we call the top rank signals and patterns. And that's things that are a combination of the two. And we'll be doing that usually takes a full day. So when I say these full days, these are trainings that we start on a Saturday when it's cold and lousy outside, which is plentiful up here in Pittsburgh. We just spend this full day going through the signals and patterns that produce not only high probabilities of correct trades, but on top of that, they produce very strong trades. So that's when that's October 29th is our option day or training day, where I've already checked for most of the nation. It's going to be cold and rainy that day, so you probably want to just sit inside and find the best option strategies. All right, so another indicator. Did I do this? Oh, another indicator is AMPI was strong. This one's strong. If you go through and you say, all right, that's strong. Is that a renegade stock? Or, well, Occidental was strong. If all of them in that sector are acting strong, that's a pretty good indication that the big money is buying that sector across the board. So we just want to find the best trades or the best setups in that sector, because that's just that much more stars in alignment, that if the the sectors are all doing strong patterns and they're being bought, that means you're not finding something that's got a renegade move to it, that whole sector is moving. So that's an additional indicator that you're in the right place at the right time. Roblox, this was another pattern, kind of your fry pan bottom, and there's your kicker signal. Notice it opened here and closed here. The next day, they gapped up, and that was, I think, based on earnings, and went the opposite direction, or essentially the investor sentiment has been dramatically kicked in the opposite direction. And what's our expectation from there? We're still in an uptrend. So if you are long Roblox, what's the logical spot to put your stop? If it comes back through here, that's not showing very good strength. Close out the position. But as long as it stays above that level, pretty much want to stay long. And there's going to be days or price movements. Oops. You can see how this one probably would have taken some profits today because you're in the overbought area. You had a little doji gap up. Then you had a hanging man. And then you traded lower. That's telling you the probabilities are starting to go against you. So if you're buying right here on the breakout, you're taking profits right here. Could you buy it back? Yeah, if it came down to the T-line and did a J-hook pattern, then you could always buy back knowing that it's heading back in this direction. So, oops, any examples that you showed, could today's candle be potentially, it could be, yes. So the energies were acting well, but they did shooting star type days. What was the other feature about this trading up today? Look how it kind of broke through that resistance level. So how do we know, or what, at least we now have a game plan of what to do from here. We're expecting a J-hook pattern. Where would we not want to see this trade tomorrow? Probably back below this level. That tells me we're not going this way. We're probably coming back in this direction. And where would we likely be heading to? Back to the T-line. But what would that tell us about our breakout? That would tell us we're back in this range. You probably don't want to be here. So if you bought today, the strategy is you definitely want to see this open positive and trade positive, confirming the J-hook. And you'll have a little bit of a prelude, that's not the right word, a forward-looking process that if crude oil tomorrow opens up early in the morning and is trading positive, that gives you a little bit more evidence that the energies are probably going to head higher. On the other hand, you wake up and you see crude oil is down $2, meaning it failed right here. Yeah, get ready to take some profits on the energy stocks if they start opening lower. So you've always got something, or not always got something, you've got other things that can give you an indication of what could happen after a suspected signal, like a shooting star. But if it did open lower tomorrow, say that, let's get right back out of this trade. Okay, so who was asking? Was it you, Tom? Asking you go to a lower price of or a lower time frame. I forget, somebody was asking earlier. Do we go to a time frame based upon hitting a level that you would, oh, Jimmy, okay. Yeah, so here's one that we were looking at a couple of days ago. We recommended this one because you had a little scoop type pattern. There's your bullish engulfing, followed by a doji sandwich breakout. Where do you think your next target was? We were expecting the 50-day moving average, but we didn't expect it all in one day. But that's the nice thing, again, about candlestick analysis, is that it puts you in situations where the probabilities of being in the good, strong price moves are greatly in your favor. So once it got up here, I don't know whether I can find that chart. I'm going to suspect this was it. Oh, I guess I could have done this. Let's just say right there is the 50-day moving average. Is at 26.52. So now, when you go to your 10-minute chart that day, well, it was well up above the 50. And there would have been a place that if you were trading it, you might take profits. And then if you were holding it longer term, there was probably the place you would close it out because it was coming back down through the 50. So that, when you flip to the 10-minute chart, now at least when you're getting up, what was the other feature right here on when it was trading here? Look how far away you were from the T-line. The further you move away from the T-line, the more you want to go to your 10-minute chart and see, again, that same logic that the further away you move from the T-line, the higher the probability it's going to come back and test it. When it drops, how do you know not to get out too early? Netflix did that on the open 2 days ago and then went up. Well, it went up. It went up after the earnings report. So this would have been a toughie to stay in, because what usually happens when there's going to be a good earnings report, there's probably a lot of people close to the company or knows what's going on. They'd usually be buying going into the close. So that was a surprise. How was there any way to account for that? There wasn't. Now what you want to do is figure out if you did get into it. Again, you have a kicker signal breakout. What do we know as far as our analysis of chart patterns based upon candlesticks? Usually if they gap up breaking out, they'll be on a 45 degree. So if I went long here somewhere, where do I not want to see it trade? I don't want to see it trade back below the low of that day, because that tells me the sellers are still in control. Please characterize the meaning of volatile market situation. Types of situations: normal, quick movement, critical or strong movement, so on. Well, usually a volatile market is defined as you can't tell which way it's going. And not only is it indecisive, but it's definitely whipsaw indecisive. That's what you call a volatile market. This is what you call a trending market. So this is why being able to visually analyze what the investor sentiment is at specific levels of a market trend allows you to make better decisions, that you know at least you're in a downtrend until you see a reversal signal and or a close back up above the T-line. Now you're starting to get to the point where our longs, our shorts, we better start taking some profits. Our longs, probably you don't want to be going after anything aggressive unless it's real strong. Sideways movement, no, the other way. This is a volatile market. where you don't have any direction, and the non-direction is pretty strong in both directions. This is what I would consider a non-volatile market. That's a trending market. So this is the area that people have trouble with, because there's really no movement. There's no direction. So they get whipsawed. Now, what really mitigates the whipsaw process is the T-line. That if you're in things that look like they're oversold and the market's starting to bottom out, what keeps you in this short position? The fact that they can never get it back up above the T-line. You stay short. Where's your safety stop? You don't want to see it close above the T-line. That's what keeps your whipsaw or getting whipsawed in and out. Same thing here. Look at our bearish kicker signal failure at the 50. Now this is something that I would consider more as a blue ice failure. They fall down through the ice. They come up, try to find the hole they fell through. They can't find it. They drown. They sink to the bottom of the pond. That's your next target. Yes, Bill, and I often get asked that question. Well, what do you do when how can you analyze something that's going up and down, above and below the T-line? How do you trade that? And the answer is you don't try to. That's exactly what it's telling you, is it's non-directional. It doesn't know which way it wants to go. That's the time that you want to probably sit back a little bit with extra cash and wait for the decision it makes as far as the direction the market's going to go. Let's see. I'm making sure I'm getting all. Let me check. I've written down some here that. So here is the visuals of a nice chart pattern. Started up, failed at the 34. Now, I guess for some of you who have just gotten in here, new, this is the 200. This is the 50, simple moving averages. The reason those are on our charts is because everybody in the world uses those to make their decisions. We're not using them to make our decisions. We're using those to see what everybody else's decisions are at those levels. The 8 exponential moving average is the T-line. Very, very strong combination, with the rationale being if the candlestick signals are the graphic depiction of telling you exactly what's going on in investor sentiment, and the T-line is a natural support and resistance level of human nature, when you combine those two, you've got an extremely high probability, powerful trend analytical combination. I've also got the 34 on here. Another good thing about candlestick charts is the most powerful reversal indicator are the signals themselves. Everything else is a confirmation. So you can put things on your chart that kind of work well, and the 34 EMA works well. If it's exponential. And we've also got this little green, this is a 3 T-line, works in conjunction with the T-line. So the reason there's not a whole lot of indicators on here is because the most important indicators are the signals themselves and where they're occurring in the stochastics. So you can see there's a kicker signal back up above the T-line. What's that telling you? Wave 1, wave 2, wave 3. And notice after the kicker signal what happened. You got a bullish doji sandwich. What do we know about the bullish doji sandwich? There's going to be more upside. Oh man, we're already at 9 o'clock, and I haven't even gotten to the good charts yet. Here's another one, NOV. You can see the obvious support of the J-hook pattern off the moving averages, off the T-line, through this level. That's another one that can be bought on positive trading tomorrow. D-Dog was pointed out today, but that was another one, just like NVIDIA, that when it was trading up here, that was a good, strong, bullish chart. But that's why you always have to see what they do by the end of the day. Yes, so you've got the 3 EMA, the green one, the 8 EMA, the T-line, very important. You can take everything else off this chart and use the T-line, the signals, and stochastics, and you could trade very successfully. The reason we've got the other ones on there is they just kind of add more confirmation of where people are making their decisions. And here was one that was pointed out today that when I started as a stockbroker in 1976, AT&T was the quintessential institutional trader, just sluggish as all get out. Wouldn't pay attention to that, except now, after 40 some odd years, AT&T's probably got a whole different configuration of what they're doing. So that now becomes a breakout of the downtrend and probably has enough percentage move to go after it. Stochastics are 1233. And that was nothing created more than when I first started learning candlesticks. It was 1455, but I was a swing trader, meaning my trades lasted anywhere from 2 to 10 trading days. So I needed something a little bit quicker. So I didn't know whether it was 1433 or what the number was. So one night I just fiddled around with it and figured out where the bottoms occurred, correlating with stochastics. I tried 1352, 1435, 1254, and after about 30 minutes, came up with 1233, and that seems to have worked for the last 30 years. Okay, so if the market isn't acting very strong, Upstart. Notice what it did today. After failing at the 50 with kind of a shooting star up here in the more or overbought area, closed below the T-line. They took it up and brought it right back down. So what would be a strategy on this one? If this opens lower tomorrow, what do you got going on? A bearish doji sandwich, which means you're probably hitting the 50 and trading lower, coming up, hitting the 50, trading lower. And that's also going to be in conjunction with the seeing that the market is opening lower. Toll Brothers. That's a bearish J-hook pattern setting up. And where is it occurring? Right there. So even though you're getting toward the oversold area, if they break this level, I got wave 1, wave 2, wave 3. Now, that tells me, well, if Toll Brothers is weak, let's see what the other ones in that sector are doing. Oh, there's Beazer Home. Kind of the same scenario. Now I take a look and say, which ones have the biggest percentage price move potential? Well, if this one has a 25% downside potential and Toll Brothers has a 15% downside, yeah, probably going to go with the one that has the strongest potential. There's a bearish J-hook pattern on plug. Why is that relevant? Because you've got wave 1, wave 2, wave 3. Now you've got wave 1, wave 2, probably heading into wave 3. Gary, you can do that. You can sell a call. You could buy a call or buy a put spread. That's, you know, all that details what we're going to be going into on the 29th to see which ones make the most sense. So there's two major factors in option trades. One, you want to be in the right direction with the strongest potential. Two, you want to be in the correct strategy that makes the most sense math-wise. So that's the thing I look at whenever I'm getting ready to put on a trade, is what makes the most sense at this level math-wise. Plug. Yep, lane 3, we are doing that one, right? What was some of the others? Try to get through them quick here. Big sell signal. The bigger the sell signal, the higher the probability. You could get ready to short this one. There's a bunch of good shorts. This is why I think the market is weak. Look at CMS Energy Company, bearish J-hook pattern with kind of your colorblind. Yep, bearish flutter kicker signal. Anytime you're in an uptrend and they gap the next day down below the previous day's open, probably want to close out the position. QuantumScape, I don't think has gotten started yet. Yeah, there's nothing there as of yet. And, conservative short, Duke Energy, bearish J-hook pattern. SMTC. Oops. Oops, I don't know why. It must have traded lower after hours. This one can be shorted with the bearish engulfing signal. Wave 1, wave 2, wave 3. BTNR, bearish engulfing signal, closed right back at the 50. So it's doing one of two things. Going to support at the 50 and head up. If it trades lower, now you've got a strong sell signal. This one is very strong. There's your bearish Harami gap down. Remember, anytime you see a sell signal and stochastics in the overbought area, a sell signal followed by a gap tells you there's strong reasons to get everybody wanting to get out. That becomes a very strong chart to the downside. Nike, same scenario. Big belt signal, bearish left-right combo. Wouldn't be afraid to short this one on weakness tomorrow. Let's see, I got 5 more here. All right. Amps, bearish J-hook pattern. At least the first target is the 200. The biggies in the building supply, Home Depot. Lowe's. Lowe's is probably even a stronger short because of the gap down. And then Snap. Whoops, the after hours. I don't know, where is Snap trading right now? Somewhere down here, because they missed earnings. ExxonMobil, no. First of all, your stochastics are still heading up. They don't look like this. That's the evening star right there. For all we know, they could be opening this one positive tomorrow, continuing your J-hook pattern. Oh, okay, Snap's at 790, all right. Okay, so right now, all the indicators, I say all the indicators, the majority of the indicators are kind of showing weakness, that there isn't a lot of strength in this market. Doesn't mean that uptrend might not still be in progress. It's telling us that we're seeing a lot of weakness, and I say a lot of weakness when we're seeing a bunch more good short positions than long positions. That means the market's having a hard time pushing up. Slow stochastics on stochastics. Yep. Again, remember, stochastics are just an indicator. Obviously, a candlestick buy signal in the overbought area doesn't mean anything, or a candlestick sell signal in the oversold area doesn't mean anything. You want to see a candlestick buy signal, obviously, in the oversold area and a sell signal in the overbought area. All right. Guess that's about all I've got. Are there any general questions on candlesticks? Okay, if not, Jim, go ahead and do the double line. And in 4.1 seconds, do the next double line. UPS. Get ready to short this one. If you're getting ready to short it, want to make sure it gets down through this level. Whirlpool. Another one you can get ready to go short. Broke this level. First target would probably be here, at least putting you in the right direction, and then see how long that downtrend occurs. AMAP, that's a nothing chart right now. If you were short, you would have covered the short either yesterday or on a positive open today. Right now, it wouldn't be long or short AMAT just because there's nothing to tell you which direction they want to take it from here. AKRO, stay long, use the T-line as your stop. AMLX, same thing, use the T-line as your stop as long as you're staying above the T-line. And PRTA, I wouldn't be long or short this one right now. It's sideways, not knowing which way to go. And Tesla will become an excellent short if it opens lower tomorrow. There's your bearish J-hook pattern. And you use the doji rule. It's going to move in the direction of how they open after a doji. So if we wake up tomorrow and the pre-market futures are showing the markets are going to open down, probably want to get ready to short some of these that are setting up. ASML, all you can do right now is stay long, but with the idea you're right here at a resistance level. So if this traded back below today's low, I'd probably come out of it and see if it's going to come back and test the T-line. Was there a setup in standard or steel dynamics? Not really. I mean, you had your best friend, your doji gap up, and you haven't been able to close below the T-line. All you can do right now is just stay long as it stays above the T-line. And Freeport, that's a nothing chart. And it's been a nothing chart for a long time. Big wedge. I wouldn't be long or short this one. Stay long. Look at your bullish flutter kicker breakout through this level. Stay long. Right now, if I was long, I'd have a safety stop at today's low. It shouldn't come back in that direction. If it does, it's giving you kind of an evening star type signal. ABBV, that's kind of a junky chart. If you were long because of this right in here, it has to open positive and trade positive tomorrow to stay in it. Salesforce, stay long on this. Just watch now to see what it's going to do here at the 50. Shopify. I thought, did Shopify make a big move after hours? If it, there, you can see your double doji setup. After your belt hold bullish engulfing, now you're at this resistance level. Stay long. Use the T line as your stop. DraftKings. If you're short, stay short. Goldman. Whoops, that's General Dynamics. Whoops. Goldman. To stay, if you're long on this one, notice where it failed. When it gapped up and just hit the 50. If you were long and it did that, you flip immediately to your 10-minute chart to see whether it's going to go through or not. Now, I did hit GD, which is still got a strong movement. Right now, the defense stocks are acting very well. There's Lockheed Martin, and I even think Boeing has a nice chart to it. Oracle, kind of a double doji setup. Stay long on this one. Expect it to at least probably test the 50. Oh boy, this one, I would have a safety stop at today's low. If it comes back down through there, they're not heading up. It needs to open positive and trade positive to stay in it. Wix, you can get ready for this. It's not real dynamic. Probably not real good until you get up through the 50, which would kind of correspond with that level. Diamond Offshore, you did kind of a dark cloud, not quite a dark cloud, but a spinning top. If I was long, I'd have a safety stop at today's low. It shouldn't come back through that level, which means it would be heading down to the test the 50. I'm sorry, test the T line. PBR, just stay long. That's a good J-hook pattern gap up. Let's see, Shopify. Closed at 29.15, so it's down a little bit after hours. So stay long as it stays above the T line. RADA. I don't know. That's a nothing chart. Wouldn't be long or short that one. This one's broke out. You could be buying this one on strength and then use the halfway point of this candle as your stop, which would probably correlate with the T line. T-Mobile, and that's a nothing chart. Rig, stay long. You can see where the J-hook pattern started, bullish engulfing, followed by a doji sandwich, followed by a trend kicker through the resistance level of the 50 and this level. I would suspect they're at least heading to the 200. And Apple, kind of nothing right now. You can see it's having a hard time getting through this resistance level, the downtrend. So I would suspect, again, all this lack of movement is based upon the political garbage going on. You still have to fight the upside potential based upon inflation still being here. They started out a few days ago because it looked like the earnings are going to come out strong, but earnings are starting to show a little bit of queasiness. So right now, The downtrend remains the predominant factor. Darn, I keep doing that. So we got to be careful we're not in this kind of mode. And this kind of mode would be more illustrated if you see weakness tomorrow and they bring the indexes back down below the T-line. All right, that's about all I got. Remember, October 29th, you don't even have to get out of your pajamas. Like Groucho Marx said, one morning I got up and in Africa and I shot an elephant in my pajamas. How he got into my pajamas, I don't know. All right, everybody. We'll see you bright and early tomorrow in the chat rooms. We'll see you then.